Everyone thinks online gambling stocks are like a casino for your portfolio. And honestly, for the most part, they're kind of right. But there's one exception, a stock I found with 23% revenue growth leading to 75% earnings growth. This one is on par with some of the AI power players, yet the stock has better fundamentals than the big name stocks in the industry like DraftKings and Flutter. This stock is doing what the big names promised they would do. And amazingly, you're probably never heard of it. In this video, I'll introduce you to this hidden gem, explain why it's rated as one of the strongest stocks in our entire system, break down the numbers that separate it from the competitors, and show you the technical setup that could be signaling a major move from here. By the way, if you're wondering who I am, I'm Steve Reitmeister. I've been investing for over 40 years. A lot of that time as editor-in-chief at Zacks.com, where I help millions of investors make more informed investment decisions. I've lived through the dot-com crash, the financial crisis, and every market cycle in between. Now I'm a partner at WallStreetZen.com, where I help develop the quant system to help speed up the due diligence process for serious investors. You can check it out yourself by entering any ticker at WallStreetZen.com right now. You'll find a link in the description below. Now, I'm not going to keep you in suspense any longer. I'm talking about Rush Street Interactive with a symbol of RSI. More importantly, I want to tell you why it's poised for success in 2026 and beyond. So let's talk about the industry and market context, then we'll dig into the company fundamentals. And by the way, if you like this kind of deep dive stock pick video, then please give this video a like so I know to make more of them in the future. Okay, to understand the stock's potential, we've got to rewind and talk about the sector at large. The online gambling sector is entering a new and interesting chapter. In 2018, the Supreme Court decision opened the floodgates for state-level sports betting legislation. The industry immediately began expanding aggressively, but now it's beginning to mature. The initial market share land grab is giving way to a more sustainable phase where profitability actually matters more than just user counts, and where operators are being judged on their ability to convert early investments into lasting cash flow. This transition is creating a meaningful separation between the companies. The operators that burned cash indiscriminately are now facing investor skepticism, while those that built with financial discipline are starting to demonstrate what attractive digital gaming economics can look like at scale. Here's one thing. Online gambling stocks have earned a mixed reputation. Many early players chase growth at any cost, spend aggressively on promotions, and struggle to convert rapid user growth into sustainable profit. As a result, investors often label the entire sector as far too risky. Indeed, two of the better-known names in the space, DraftKings and Flutter, are both C or hold rated according to our Zen rating system. Our system grades stocks from A to F, and just like your school grades, C's are okay, but your parents aren't taking you out for ice cream for that kind of mediocre performance. A's and B's are much, much preferred. But not all operators are built the same. That's why I'm looking at the strongest A-rated gambling name in our system right now. Again, I'm talking about Rush Street Interactive with a symbol of RSI. RSI is an online casino and sports betting operator focused on the regulated U.S. and Latin American markets. This up-and-comer is combining rapid revenue growth and improving profitability and disciplined customer acquisition in markets that are still early in their adoption curve. Even though I am more of a fundamental investor, I did want to talk about Rush's price chart because I noticed something interesting there. It looks like the stock is carving out a large base, which you'll see in the yellow, for an eventual cup and handle type breakout. If you want to know more about the cup and handle pattern, I've put a link in the description to our blog post on that topic below. Beyond chart patterns, here's why I'm keeping an eye on Rush Street Interactive. First, it's built for growth in regulated markets. As I mentioned earlier, RSI operates both in the U.S. and other key international markets. The long-term opportunity is straightforward. As more jurisdictions legalize and regulate online gaming, operators with licensing experience, compliance infrastructure, and localized platforms will gain access to entirely new revenue streams. Unlike land-based casinos, digital gaming scales much more efficiently. Once a platform is built and licensed, incremental users come at far lower costs. The key is surviving the early years of market entry when customer acquisition costs are highest and reaching the point where mature markets generate steady, recurring cash flow. That's where RSI strategy begins to matter. By the way, if you want to know when I post more videos like this one, please hit that subscribe button below. It's the best way to ensure you never miss any of my future stock picks. Back to RSI. The next thing I like about the stock is that it's focused on economics, not just growth, Let me explain what I mean. Rather than spending indiscriminately to chase market share, Rush Street Interactive has emphasized unit economics, prioritizing markets where it sees a clear path to profitability. As gambling matures in the state, the marketing intensity declines, retention improves, and fixed platform costs are spread across a large revenue base. This creates operating leverage. Once a market reaches scale, incremental revenue drops more meaningfully to the bottom line. RSI's progress improving profit margins and reducing reliance on promotional spending suggests the business is transitioning from a market share land grab phase to a more sustainable operating model. This is also showing up in our component grades for Rush, where the stock is scoring an A in financials because of strong cost reduction, return on equity, and more of the financial measurements. If you want to know more about how the Zen ratings and our component grades work, click the link in the description below. That said, RSI is no slouch when it comes to growth either. It's currently scoring an A for growth as well, which is better than its peers DraftKings and Flutter. This is why I'm essentially thinking of Rush as a smaller cap, higher upside play on the same sector because of their better growth and financial profile. As I said at the top, the company is enjoying 23% year-over-year revenue growth. Because of their disciplined operational strength, this equates to a 75% earnings growth, which far outpaces the gambling industry average. Speaking of profitability, I've used the same system I used to find RSI to unearth 3 more high-potential stocks I believe could double in the next year. You can get it for free, either scan the QR code or click the link in the description. As I referenced before, an underappreciated part of the RSI story is its international footprint, particularly in Latin America. These markets often feature faster user growth, less saturated competition, and improving regulatory clarity. International operations also provide diversification away from U.S. regulatory cycle and offer additional long-term upside if digital gaming adoption continues globally. For investors, that optionality matters, especially compared to peers focused almost entirely on the U.S. market and the handful of states that allow the operation. While RSI's fundamentals are compelling, there are potential risks you should know about. Regulatory uncertainty remains the dominant risk. State-level gaming laws can change at any time. New taxes or restrictions can be imposed, and federal legislation could alter the landscape. Also, competition is intensifying as major players like DraftKings, FanDuel, and BetMGM continue to hold significant market share advantages. RSI's smaller scale means it has less bargaining power with sports leagues, media partners, and payment processors. In a market where brand recognition drives customer acquisition, being a third or fourth choice could create a persistent headwind. Related to that last point, liquidity and scale disadvantage matter in capital-intensive moments. Larger competitors can outspend Rush as a new market launches, or invest more heavily in technology and product development, potentially widening competitive gaps over time. For investors considering RSI, these risks suggest the stock is better suited for those with patience and tolerance for volatility, particularly around regulatory developments, quarterly results that could show uneven progress. So here's my final take. RSI offers exposure to the long-term shift towards regulated online gaming, with improved scale economics, geographic diversification, and a management team focused on profitability rather than just the vanity metrics. It may not be a household name like FanDuel or DraftKings, but if you dig below the surface, their metrics and fundamentals are even more impressive. If the company keeps moving in that direction, the gap between how the stock is perceived and how the business actually performs could narrow. This creates exciting upside potential for patient investors willing to look past the sector's spotty reputation. That's my take. What's yours? Please leave a comment below and let me know what you think about Rush Street Interactive or gambling stocks in general. I'm very interested in how others perceive this sector and its potential upside. If you like this video, then you might also be interested in my take on another high potential stock, this time from the pharma industry. There, I found an under-the-radar name that I think could trounce bigger players like Merck and Pfizer in the coming year. Be sure to watch that now.